Manager, Investment Analyst over at the Nedbank Investment Group for her assessment on today's session. So broadly expected, but perhaps some nuances in the Reserve Bank's statements, particularly regarding the various scenarios in which the governor outlined as potential risks to the interest rate path going forward. Your key takeaways are what?
Thanks so much, Fifi, and thanks for having me. Certainly, it was expected 25 basis points, but I think after yesterday's print that came out for inflation, there was talk that maybe the Reserve Bank had space to be a lot more aggressive. But as we know, the South African Reserve Bank does look at inflation over a longer period of time. So one inflation print wouldn't necessarily move the dial. But in terms of those scenarios, I mean, he highlighted that the global space, in terms of all the things that are happening from an inflationary perspective, geopolitics, those are things that are of concern, and therefore we shouldn't be too complacent when it comes to the inflation picture. And again, the growth picture is also saying that that is a concern. So when it came to growth, the balance of risks, the SARB said that they were looking at that as pretty even, and also looked at inflation as the same. So, I think maybe we might, or I myself would have been very happy with a 50 basis point cut, but you can understand the cautious approach. And of course, if you look at a few, factors or scenarios that seem to be happening now, that perhaps maybe have happened a few years ago, and then you want to try and draw those similarities if we have a chance.
Sure. Let's, and perhaps before we get there, I just want your broad assessment on the state of South Africa's economy. I mean, right now we've had so many consumer updates from players that play in that space that are showing that the consumer has been able to hold up a lot stronger than perhaps was previously feared in the wake of these elevated interest rates and borrowing costs and all of that they've had to contend to. Notwithstanding, it seems like the consumer is in pretty good shape based on some of the results that we are getting. We heard that business is also feeling a little bit more cheerful about the outlook of South Africa's economy, just in the wake of some of those business confidence figures that we recently received. And again, just what some of the ratings agencies have said and how they are viewing South Africa's economy as slightly more positive than their last assessment. What is your gauge or your read on the economic landscape right now, Tumisho, and ultimately what this could mean for South African equities?
Thanks for that, Fifi. I think there is a lot to really think about and take into consideration. So if we look at the South African consumer, there are a number of things that are working in the South African consumer's favor. So firstly, we did have the two-part retirement system that came into effect in September. The governor did say that we are yet to see what the impact of that has been. We'll see that in the third quarter numbers, as he mentioned, that are due in the next couple of weeks. Inflation, of course, is also going in the right direction, which should also help consumers, and of course, really going into this festive season, as you mentioned earlier. When it comes to, I think, business confidence, which is also quite, responsible for the amount of investment that goes into the South African economy. So if they invest a lot more, then that means they will be able to create more jobs, and then, that circle of confidence, basically feeds itself. So one of the things I think that came out yesterday was the FNB BER consumer confidence number, which was below the 50 mark, which shows the expansion and contraction. But I think what was quite encouraging about it was, the retail sector was still seen as quite, strong or positive. And I think in quite a really long time, we did see the manufacturing sector, the construction sector, sorry, not the manufacturing sector, the construction sector that was also feeling quite positive. And really, this was also on the back of, the GNU and the reforms that the government has been proposing. So it seemed as though, maybe business is really taking on board what government has been saying around really putting those infrastructure plans, forward. But I think if we look at, investment, it's a very big world. I think before there's been a lot of focus on artificial intelligence in the US and how well it's doing. But I think now this gives an opportunity for us to possibly look at other, opportunity sets or other asset classes within South Africa. If we keep on doing what we're doing and the reforms are going well, that SA-focused stocks are likely to do well from a US perspective. If you don't want to be looking at the AI, generation or looking at those particular counters, if you look at just some of the policies that President Trump is going to to be, or president-elect is going to be putting into place, say, for example, looser regulations, so the likes of your banking stocks and your technology stocks are likely to benefit from that. So yeah, it is broadening a little bit, but also I think the inflationary pressures are something that we still continue to watch, because this definitely has implications on what asset class we jump into.